Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some of the stocks that were in play today. Yeah, the markets were down big and under huge pressure, and so volatility was spiking, and UVXY had a really nice day today, closed up 14%, so congrats everybody. RSI is back above 50 at 52. You've got Fasto now back above 20. Check out how the green line crossed the black line here, plus DI crossed above ADX, and so that's a signal the bulls are heating up. The technical bullish development today was the close above EMA's 4, 8, and 13 and the middle Bollinger Band. That's the dotted purple line, along with the red descending resistance line. The close above all 5 levels was very bullish. If it can stay above, then a new uptrend could begin. Now if it has a similar move like it did back here in early March when it closed above the middle Bollinger Band and then the next day it got back below, it could signal more consolidation. It needs to turn this middle Bollinger Band at 1604 into support to head higher. So if you see it drop below 16, that'll signal it's not ready to go. Notice this symmetrical triangle pattern is trying to play out here. It's at the end of the pattern. If you get a break above the top of the descending resistance line, many times that signals a breakout higher. Now the closing price here on the first trading day of March, that 19 resistance zone, will be the key level to break if it can get above 17. Notice the volume spike. There was a PSAR bull flip. The dots, green dots here, flip below the candles for the first time since the pullback, and then you also have a MACD bull cross on the 820, the 8, 13, and 5. Okay, so keep an eye on the 12, 26, and 9 MACD. If you look at the UVXY 15-minute chart, you can see here it formed an intraday temporary top here. Maybe this isn't the textbook what you call a double top, but this is an intraday double top. It came, hit a top, hit that level again, and pulled back, and then now it needs to break above that 1725 resistance zone to head higher. You can see here there was multiple red candles in a row, 4 in a row, or 5 in a row, and there was a close below the middle Bollinger Band. So that is a red flag. It needs to get back above 1664. If that middle Bollinger Band turns into resistance, you could see a drop down here to the 300 simple moving average at 1567. It needs to stay above that level. That's the top moving average. Okay, with the 50, 100, 200, the 300 right now is on the top, and so it needs to stay above that level. If it pulls back below that 300 simple moving average, that would signal downside risk. So it looks like people were playing, setting this up for a potential bounce for the markets tomorrow. If you look at TVIX, it closed up 17.5%. You have a same setup, RSI at 51. Fasto's now above 20. You have the bull cross on ADX. You do not have a PSAR bull flip. There was a nice volume spike today. So check out the big volume behind today's move. It was the largest volume day since back in February. And then once again, the bullish move was the close above the middle Bollinger Band. And then it also closed above. It started the day below the 50 and the 100-day simple moving averages. That's the green and the gold line, and then also the EMA's 4, 8, and 13. So if it can stay above 794, basically if it can turn 8 into support, it could get a new uptrend going. Just like UVXY, it got above the middle Bollinger Band, it failed to hold and pulled back. If it can stay above that level, similar to back here in January, this is what you're looking for, then it can get a new uptrend going. So the bulls don't want to see this happen. They want to see this type of pattern happen. So what needs to, the next technical development that really needs to happen is hold that middle Bollinger Band and then break above this descending resistance line. And so you can see it's lined up right here. So a break above 850, a close above 850 would signal a potential breakout higher. And then if you look down here on MACD, you can see it had a bull cross on TVIX on the 8, 13, and 5, and then the 12, 26, and 9 starting to pinch. Okay, let's look at GERN. Yeah, this had a big breakout today. The markets were, crashing, and GERN was breaking out. Yeah, and also with LABD has been on fire. The biotech bear 3 times, and so yeah, when you see strength in stocks like GERN, that's showing some, that's very, very bullish. Considering the biotechs have been under big pressure. Look at this huge volume spike today. So giant volume behind the move. There was a big gap up open. That is the one red flag. flag currently on the there's a couple red flags, but this is a red flag on the chart. It is the space between high of day yesterday on Friday and low of day today. If there's a pullback to EMA4 at 369, that would fill the gap. Okay, today's candle did form above that upper Bollinger Band. Many times when that happens, the candles will work back into the bands, similar to back over here, where you get above the upper Bollinger Band and they work their way back in. If they do work back into the bands, you want to see that EMA4 support hold. Notice how the pink line here has been holding during the entire run. A close below EMA4 would be a bearish change in trend. You know, there was a giant volume spike today, so you have to keep an eye out for that climax spike. You know, it has a really nice move, and when stocks are breaking out, we like to look at the weekly chart to find the next resistance levels, and you can see the gap again here on the weekly chart. So if there's a drop down to 870, that would, or 370, that would fill the gap, and so right now it's hitting resistance from back here in 2015, and so it needs to get through this 430, 440, 2015 resistance zone, and if it can do that, then 5 would be on deck. That's the big close from back here in November of 2015, and so that's the next target if it can get above this 430, 440 resistance zone. Now if it stalls out here, this was big resistance back in 2015. The candles could work back into the bands. Now notice how this week's candle is really floating above that upper Bollinger Band. The upper Bollinger Band's way down here at around 350, and so, you know, having the candle floating well above, I mean, that's just telling you this is overextended. Check out the number of volume bars here. You know, there's 5 green volume bars in a row, and then you have this big gap open and a strong push. I would be on the lookout for this pulling back. You know, if it cools down and the candles work back in the bands, the downside risk is that it pulls back to EMA4 at 346. So this is a bit of a parabolic move here. You know, you know, could come back and fill that gap. We'll just have to see if it can get above 440. Then 5 will be on deck. Okay, let's look at ENRJ. Closed up 50% today. This is one that we've been following. This was a really big move. Unfortunately, it had that big pullback. You know, we were on this when it closed above the middle Bollinger Band back here in early March, or, you know, I guess it was 2 weeks ago, 2 Fridays ago. And then it followed through and it hit that 100-day simple moving average and pulled back. Well, after turning this 50-day simple moving average, the green line, into support at 19, today it broke out back above that 100-day simple moving average at 23, and then it ran above the 200-day simple moving average, and then temporarily got above the 300-day simple moving average. It ran all the way to 50, but then it pulled back. This is a really nasty pullback. This shows major dilution. It did close below the 300-day simple moving average. You know, our strategy is if it's trading above that level intraday and then it pulls back and is going to be closing below, that's your signal to exit. It signals resistance. Now it can break above. It has to get above that 31 resistance level to head higher. If 31's resistance, then it could pull back into the bands. This did close above the upper Bollinger Band, which is down here at 25. You know, it needs to hold that 200-day simple moving average at 26. If it drops below that, then you could have that 23 level on deck. If it busts above 31, then yeah, that would be a clear signal that it wants to head higher. It needs to stay above 31 to keep this uptrend going. If you see here, it's got this giant volume spike today, but that is a red flag. You know, if you look at accumulation distribution here, you'll see that there's a major spike down today, and so that is, you know, a signal that the company was selling shares and diluting. So you can see here accumulation distribution fell off a cliff big time, even though there was a giant volume spike and it was up 50% on the day. So that is a red flag. If you could see here on the 15-minute chart for ENRJ, it was cruising the entire day, riding that pink line, riding it the whole day, and then here's your red flag. It formed the you know, an inverted hammer, you know, almost the shooting star pattern. And so basically, if you see a hammer or a doji during an uptrend. Many times that signals a temporary top. This long upper wick, this is the dilution that we just looked at on you know, that was you know, this right here. You know, they got out up at the top, unloaded a bunch of shares. You could see the volume bars confirm that. You can see the big volumes at the top. So this is what we call a climax spike, and then the red candle followed. If you didn't try to lock in gains on the break below EMA 4, that drop below the middle Bollinger Band signaled that the chart was breaking down. Now it needs to get, there's that 31 level again. It needs to get above 31 and turn that into support. If 31 turns into resistance, then the downside risk is it drops down to the 57 moving average at 246. Okay, let's take a look at RKDA. Closed up 9% today. You know, it does have RSI at 84, so it is a bit frothy, very frothy on RSI. Fasto is trying to heat up again here with this crossover. Basically, you've got an indecision candle today. You've got this red, this black candle forming as the candles are forming, you know, work their way back into the bands after the red candle. You know, this candle formed completely above the upper Bollinger Band, and so the candles have been working their way back in. The black candle today, you know, I would call that indecision candle. It's failing to get above the closing price here on the 14th, and so it has to break that 47.50 level. If it does, then it could run up to this 57.50. Now, Phil, to break 47.50 would be a red flag, and then you'd see this. You know, you can see today's real candle body did form completely above the upper Bollinger Band. The candles could work into the bands. Now it needs to hold EMA 4 at basically $40. Okay, so 40 has been holding. You know, it's been holding since back here in the first trade. You know, 1st of March, and then it turned into support. It's been holding during the entire run. Once you see it drop below and it's going for a close below, that's when this trend has been confirmed broken, and then you're going to see the pullback. The downside risk is there is a gap down here between high of day on the 13th and low of day on the 14th, and so, you know, breaking below $40 with a close below, that could potentially set up a drop all the way down to 15 to fill the gap, because you have the middle Bollinger Band way down there at 14. So that would be quite the haircut, and so that's why this is a very, very, very risky trade to be long right now. Look at the average daily volume back here. Volume is fleeting, and you're way up here in the 50s. You know, just think about it. You know, more than likely this is going to pull back soon. If you look here on the 15-minute chart for RKDA, you could see it's got this you know, formed a top over here between the 14th and 15th, and then it came back down, and then it hit that level again today, and it failed to break. And so failing to get above this 52 to 54 resistance zone was a red flag. It pulled back, and then notice the super consolidation into the close. That's a very tight channel. It did hold the middle Bollinger Band, so I would keep an eye on 45.50 tomorrow if I was long, and then if it breaks and drops below that, that's going to be your red flag. You know, because this is really risky. If it breaks down, it could really get moving to the downside, and so you've got the 50 and 100 simple moving averages here at 42.50 level. You know, they need to hold if because that's the downside risk. If it breaks that 45.50, it's dropping down to 42.50, and if that breaks, that's when you're getting the huge drop down to the 20. You know, you've got 26 way down here, the 200 simple moving average. So yeah, so this is an interesting setup here. I would be very cautious if I was long. Okay, let's look at AVGR. It closed up 16% today. Yeah, it's breaking above 30 on RSI. Yeah, this is, you know, a lot of people were talking about this in the chat, and so yeah, so check this out. It's above 50 on RSI. You know, it's heating up. You know, it had the big volume today. Look at the giant volume spike. So huge volume. The technical development today was the close above the dotted purple line, which is the middle Bollinger Band at 129, and then above EMA 13 at 138. That's the orange line. So if it can stay above both levels and stay above 138, that will signal possible start of a new uptrend. This is the first close above the middle Bollinger Band since way back here when it closed right at that level on January 22nd. All of these candles are below the middle Bollinger Band, which is also the 20-day simple moving average. And so if that turns into support, that's a major bullish change in trend. Now don't get too excited though. You know, it's hitting the top of the channel. So you know, I'm calling basically this closing price on 20th as the top of this sideways channel. You can see the upper wick on today's candle hit that level and pulled back. It's also hitting the upper Bollinger Band. We're calling that the 150 resistance zone. So if it can break above 150, that's going to be your signal. Okay, yeah, it wants to push higher. And then you have the bottom of the gap. There's a gap between low of day on the 13th and high of day on the 15th. And so that's right about, you know, what is that? Maybe, you know, right around 180, 190. You know, we'll have to get, you know, I don't have the exact price right here, but between $1.75 and $2, you have the bottom of the gap level. And if that is tested, that's likely to signal a temporary top. It's usually really difficult to break a bottom of the gap on the first try, so keep that in mind. If it does break the bottom of the gap, you could get a gap fill and a run up to 250. Now, if it drops back below the middle Bollinger Band, it fails to turn that 130 level into support, that will be a red flag signaling more consolidation. Okay, take a look at NFES. This was a big winner today. It closed up 90%. So yeah, on 17 million shares. So I mean, this, you know, this was a big winner. It had big money flow. Everybody was trading this, but you know, you have to be careful. What you need to look at when you're you know, it's in the morning and you're looking at stocks that are running. One of the first things, I mean, you can do whatever you want, but one of the things that I like to do is look at volume, especially if you're playing the penny stocks. And so look at the average daily volume here. To me, this is a major red flag. Okay, because this has no volume on a daily basis, right? And so why is that important? Because small caps sell shares to pay the bills, right? So they use rallies to dump shares, and if there's no average daily volume, they're going to use this run to dump. And so when it hit up here at high of day at 370, look what happened. The long upper wick formed. They dumped heavy. You know, they used the run up to unload and dilute. And so yeah, so the only way that you can really make money is if you get in pre-market early in the day. I mean, it says it opened way down here at $1. So if you jumped in at the start of the day, I mean, you could totally have traded this. You know, I think this would be a risk to hold overnight because it closed well above the upper Bollinger Band, which is way down here at 142. And so you have downside risk of it dropping all the way down to EMA4 at 135. When you look at the average daily volume and you compare that to the upside potential, you know, to the downside risk, you know, in my opinion, there's more downside risk here than there is upside potential. And so, you know, just because the average daily volume is so low, and once it dries up, it's going to be really difficult to sell. And it closed well above the upper Bollinger Band, and it had the big sell-off from high of day. Those are red flags. Look at accumulation distribution. You know, it fell right off a cliff, right? They dumped heavy into the rally. Look at CMF; it spiked down. Notice how that histogram bar, today's histogram bar, is larger than yesterday's, Friday's, and so that's not what you want to see when a stock is up 90% on the day and it has a giant volume. This is bearish divergence, and so you just have to know that when you're playing penny stocks that these are just trading vehicles. And once you start seeing that this type of pattern form, the best thing to do is to lock in gains. The best place to lock in gains was up here, and every moment that you did not lock in gains, you were missing out, because more than likely this is heading all the way down to here. And so yeah, it's going to be a race to see who can get out before it hits that 130 level. If you look at NFE, I mean, and that's just my opinion, and I could totally be wrong. If you look at the NFES weekly chart, so you could see here the giant volume this week, and so that you know, that is, you know, huge volume. If you look at this multi-year, and this goes all the way back to 2014, that this is the largest volume week since then. Maybe this will push higher, and so I think that the best way to determine whether or not that's going to happen is by looking at this weekly chart and at this resistance zone right here in 2015. If it can break above this 220 resistance zone, then it could head higher. It could possibly run up to 320. That's the high close over here in 2014. From what is that? From August of 2014, there was a high close up there at 320, and that would be the target if it can get above this 2015. If you see it fail to get above 220, that would be a red flag. Down here, it's breaking out above the 2016 high close, and notice how that's lined up with way over here at 135. 5. That is the previous channel, and so down here, because it's breaking above the 200 and 300 week moving averages and above the top of this channel, and so the risk is that it works its way back down and actually closes for the week inside of this channel. You know, look at these long upper wicks on these previous candles. The market makers could drive this thing all the way down. Today's just Monday, and so keep in mind that this week's candle will not set until Friday. Now it could do the opposite, and it could push higher and run all the way to 320. You just have to follow the charts. If you look at the 15-minute chart for NFEC, you could see it had the huge volume at the beginning of the day, and then it worked its way back into the bands. When EMA4 was breaking here, you know, that was a red flag. This whole section here, you know, it failed to hold EMA4. That's when you know it's going to consolidate. And then when it broke the middle Bollinger Band, that was a major red flag. It really got going to the downside after that middle Bollinger Band broke. And so really, when you're looking to lock in gains, this is your best zone to lock them in. Once it starts breaking below the middle Bollinger Band, then the momentum gets going to the downside, and it gets harder and harder to sell. And so it drives it lower as you're fighting people to get out. Notice how it closed on all these red volume bars. And so it did bounce off of the 100 or the 50 simple moving average at 188. So that is the key level to hold. If it drops below 188, that's going to be a red flag. It could drop down to 139 and test that 100 simple moving average. And once again, there's that 130 zone. Okay, let's look at KLDX. Okay, yeah, so this closed up 52% today. So it formed the black candle, and so the black candle on stockcharts.com charts, that shows you that even the open is up here at 230 and the close is down here at 220. So even though today it was up on the day, it closed up 52%. It closed below the open, forming the black candle. That's a signal that actually the bears were in control into the close. Look how it closed near low of day. And so you know, this was somewhat of a bull trap up here. If you bought near high of day, basically it has to hold the 100-day simple moving average at 220. So going forward above 220, and then it could push higher. The 200-day simple moving average is the next simple moving average resistance level to break on this chart. If it fails to get above 220, okay, and you can see here it's hit that's this resistance zone from back here in January. If it fails to get above that level and it drops below the 100-day simple moving average at 220, the downside risk is the candles work back into the bands, and it comes down to this 50-day simple moving average at 181 and EMA4 at 173. Notice the upper Bollinger Band's at 182, and so this is floating so far above the upper Bollinger Band, it has a really good chance of dropping back in. And so we'll see if it can hold support here. It's all about 220. Above 220 signals upside, below 220 signals downside risk. Okay, let's look at XRM. Yeah, they've been running some of these like industrial machinery stocks. We've noticed that has been running, and what was the other one? Yeah, industrial machinery. And yeah, I guess they were both. Yeah, so notice how NFEC and then this XRM are both industrial machinery. They do that with these penny stocks. They'll pick like a sector and they'll run the stocks that are all similar. And so you know, they did that with the specialty material chemical stocks last week. So keep an eye on this sector. You know, I would look it up. You know, do a Google search, micro cap industrial machinery stocks, and I bet you'll see some other stocks that are in the sector that are heating up. But that's what it looks like they're doing right now. And so you have XRM pushed above high close horizontal resistance. You can see here it got above the $6 resistance zone. And so it's making a nice breakout higher. Notice the big volume. It's pushing through the upper Bollinger Band. It had the P-star bull flip. You know, you have the MACD bull cross down here on the 8, 13, and 5, and the 12, 26, and 9 is getting ready to flip or cross. And so, yeah, it's really heating up. If you look at the weekly chart, it's making a good move this week. It's breaking out above the 50 and 100-week moving averages. The 50-week moving average is the green line down here at 572. And if it can close above that level and above the 100-week moving average at 616, that would be really bullish if it could turn both those levels into support. Now it has to get through this resistance from 2016 and 2017. That's what it's hitting right now. If it can, then 750 would be the next target. That's this high close from June of 2015. Okay, so it looks like it's got a really nice uptrend right now. You know, it's forming candles above the middle Bollinger Band, so it's in a solid longer term swing trade uptrend for people that trade stocks longer term, because it's riding EMA 4 support above the middle Bollinger Band on the weekly chart, and it's breaking the 50 and 100 week moving averages. If it stays above that, that's just what you want to see. That signals it's a really good uptrend. And so if it can get above 650, 750's on deck, and then you got this 850 zone over here, and then if you can break above that, you've got the 200 and 300 week moving averages up here between 950 and 10. Okay, so yeah, keep an eye on that one. And then another one to look at is OGEN. This is another one that we alerted last week. This was alerted on this bullish Harami reversal pattern right here that formed. It's trying to confirm it. It's still in play because it's holding the middle Bollinger Band. Okay, that's at 204. If it stays above $2, it's in play. That's also the 50-day simple moving average at 207. If it can hold those levels, it's still in play. It's stayed above them for 5 days in a row, so it looks like it's turning into support. So this is one to keep an eye on if you're a penny stock trader. The next level is the 100-day simple moving average at 268. It should run to that level if $2 holds. $2 should be the stop loss level. If it drops below, it's going to close below, it will be a risk to hold. That's why we say mental stop loss, because these lower wicks would stop you out if you used a real $2 stop loss. If you use a mental stop loss, you have to be disciplined, but that way you could prevent yourself from the market makers stopping you out before they take it potentially higher. Okay, and notice the volume down here. It had a little volume pickup today. And so what makes it interesting, it had the volume spike before. This could just totally continue sideways here. It's in a channel. It's in the right sector. They've been running some of these penny stocks, but with LABD getting crushed right now, I'll post a video on the ETFs next. LBD doing well and biotech's getting punished. It's tough for the biotechs to really break out right now. Okay, let's look at, and that could reverse anytime. Okay, look at BDR. To finish this video up with, yeah, this is another one this is technology and electrical components. Okay, and so you have the the industrial machinery, and then another one we saw several stocks that were moving that were penny stocks today were technology and electrical components. So look up that sector as well. Just do a Google search and micro cap, small cap, stocks in the sector. Maybe you'll find some more plays. Yeah, you can see here there's a symmetrical triangle pattern, and it's breaking out of the top of the descending resistance line, and so many times that signals a breakout higher. It's also breaking out above this horizontal high close resistance from February. So this is a good move. Yeah, if it can just stay above that 65 level and then break above 70, it could run up here to the 77.5 level, which is the closing price on January 16th. That would be the next target. This is a nice breakout above. It just has to continue pushing higher. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, please come check us out. Please come check out our chat. I'll post the link below the video. Thank you.